Closer to home, name to watch, Netflix. That stock higher by about 4% after reporting third quarter results. And joining us now is Propagate Content Chairman and Co-CEO Ben Silverman. He was formerly co-chairman of NBC Entertainment and executive producer of The Office. And he's author of the new book called The Night Before Christmas at Dunder Mifflin. Ben, about Netflix. It's higher right now after hours, kind of beating a raise here, but it has been on quite a run. How much does Netflix's run recently reflect the separation in its business from the mainstream media players, which are not anywhere near all-time highs?
I mean, I think it's going to lead to more consolidation in the traditional media players and the kind of smaller streamer space, because the moat they are building is growing and quickly. And they're also out investing into original content, into sports content, into gaming, into technologies, all of which are going to continue, I think, to reward them as they expand their profits, but also as they expand their businesses. And one of the main things about Netflix is just what they've done internationally. You know, many streamers are looking to grow internationally, where Netflix has been with massive operations in multiple markets, but they also have local content teams, not only local teams that are re-expressing the content from the United States and the productions that happen here, but also players who are commissioning content in local languages for local markets, to the point that Netflix may look like cable in 10 years to consumers overseas.
Okay, so mentioning a few of those competitors, we got a few names on the screen, but I'm thinking not just Disney, but Comcast, Warner Brothers Discovery, Paramount, et cetera. You mentioned investment. Netflix has the money from its streaming business to make those investments back into streaming. The others don't have that same capability. What kind of difference do you expect that piece in particular to make?
Well, I think you start to really see it, and you've seen it reflected in the Paramount sale and what, Warner Brothers struggles. But, Comcast has the ability to sell a lot of Wi-Fi and a lot of phones now and a lot of other businesses that can drive phone services, businesses that can drive investment in their content business, which becomes, I think, when they made that NBC Universal acquisition, an engine for the whole company. Amazon is in so many businesses, and frankly, on the advertising and scale side, has a lead on Netflix by a huge margin in what they're doing. And so they clearly have opportunity to really compete, as does Apple. Apple's playing a little bit more of what HBO was kind of 15, 20 years ago play, and really going after this super premium consumer and super premium content. But their services business has grown. I think the companies that are in trouble are the pure plays, and they need to either consolidate to get to scale and mass, or they'll potentially find themselves, like MGM did, being acquired by some of these larger players in the future.
I mean, given the fact that you do create and produce shows for Netflix and others, just your sense of the spending outlook for content. And we've had analysts on this show ahead of Netflix earnings saying, listen, content spend, at least at Netflix, is very steady, even as we see free cash flow continue to ramp here. But we also know some of those more traditional media companies are really tightening belts and cutting costs. So how does all of that shake out?
Well, I worry about that slippery slope, right? You're competing with a competitor who's now, outgrowing and outspending. You can't cut to compete. You can cut to make a quarter, but you can't cut to compete in the long term. So it'll be interesting to see how that plays. I do see a more mixture of investment. So instead of every TV series on the scripted side being $9 million, you're able to populate shows that maybe cost $1 to $3 million. You're able to commit to documentaries, which have been unbelievably robust. We've been living in a golden age of television. We're also in this golden age of documentary and other genres that are much less expensive to invest in and can round out your portfolio of content. So I think they're going to have to be smarter about it. But they're not giving up, right? NBCU just made a huge play and got the NBA, and Amazon as well. And we know David Ellison and Larry Ellison behind him are going to be able to pump a lot of resources into CBS Paramount. So I think we are going to find ourselves in an age where there's going to be renewed investment. I also want to just say one thing about the sports acquisitions that a lot of these platforms are making. They are key drivers to advertising, not only drivers in the ability to scale an audience at once, as Netflix will do on Christmas Day, as Amazon does on Thursday night, as NBC will do with the NBA and other players, but they're also events you can convene the advertisers. You can bring your key stakeholders to the Super Bowl. You can bring them to a ball game. You can bring them to a golf event. And they really serve in a myriad of ways for your advertising business beyond just the ratings that an initial audience delivers on the game itself. And they're also unbelievable marketing platforms for your other content.